Once again, we are back on BRIMS podcast Pratibimb. We try and invite prominent personalities on this podcast so that they share their knowledge with the target audience. Today on this show, we are having Professor Siddhesh.
Hello.
Sir, welcome to this show. Now, normally here in these episodes, we'll bring some clarity as far as the IPO which is concerned. And also like a small introduction of yours. I think you did your CFA from USA, MBA in finance. And there are the three projects to what you have done. You're part of a crystal also. You did projects for RBI, SBI, Life and Sun Pharma so having a rich and diversified experience, can you share some light as far as what is an IPO and what are the steps which are involved in IPO
Yes. So IPO is basically initial public offering, which is the first time a private limited company offers its equity share to general public. So the procedure, if we start with the basic, they have to file something called as a draft red herring prospectus, DRHP, with the SEBI. SEBI typically takes 1 to 3 months to approve a particular DRHP. Once it is approved, it is up to the company to bring an IPO within 12 months. And for the IPO to be successful, there has to be a 90% minimum subscription. So for which the company takes help of merchant bankers, investment bank, and do road shows and all. And most of the cases the IPOs become successful. In a very rare case they fail. And once IPO is successful, then the company's shares are listed on a stock exchange like BSE and NSE.
And what is the key motivation to go public
Primarily capital, right? So once companies reach a particular stage, they require a lot of funding, and the general public is probably the largest source of funding. So to fund their growth, their expansion, R&D expenditure. So that is the primary reason. Also another reason that typically companies go for IPO is the exit for existing shareholders. So when in the initial stage there are angel investors, VCs, even promoters sometimes want to dilute some stake. So these are the IPO is a route for them to exit the company. Another reason can be IPO brings brand credibility. So when a company gets public listed, it gets media attention from all the financial shareholders, etc. So that also kind of helps the company, and it effectively helps the company to raise subsequent funding. So once it's listed, people trust it a lot. So that also helps. So these are the possible reasons.
Good. I think you just spoken in terms of the IPO and the steps which are there, and also the motivation level as to the IPO which are concerned. My next question to you is, what is the right time to bring an IPO
From a company perspective, right?
Company perspective.
Yes. Okay. So I will split my answer into two parts. That is internal factors. So from a company's point of view, first they have to clear the eligibility criteria for SEBI. So SEBI has some guidelines and rules for it. So they have to clear those rules first. A company can go for an IPO when they have consistent sales growth. That has to be there. They have to be positive at EBITDA level, which is earnings before interest, tax, depreciation and amortization. So an operating level profitability has to be there. There has to be a positive net worth. Right. So these are some conditions at an internal level, and there has to be a clear path for sustained profitability at after tax level as well. So even if they are not currently, there has to be a sustained profitability path or clear strategic way designed.
This is the internal aspect. And what is an external part which is there?
Yeah, so externally I think the positive market sentiment has to be one of the key reasons, right? Currently, let me just give the recent example. So currently in 2026 the market sentiment is quite negative. So we have like war-like conditions and trade issues and a lot of things. So statistically we have seen that there has been a drop of 30% in number of IPOs from 2025. Right. So positive market sentiment is one of the reasons. So recently two companies, Flipkart and PhonePe, have delayed their IPOs because of the negative sentiment in the market. But at the same time, you also have to look at the industrial sentiment. So like for example, in few cases like currently AI is on the boom, and a lot of discussions are happening on AI. So probably AI companies, even if the entire market sentiment is bad, but if AI sentiment is good, probably they can come for IPOs.
Okay.
So these are the external conditions. I will say the market sentiment. Typically, bull runs give better valuations. So
Okay.
that is how it works with IPOs.
Good,
yeah.
Professor Siddhesh, I am sure like the students who are listening to you, even the corporates who are listening to you, I think you have made it clear as the steps which are involved in as an IPO which are concerned, and also what is the motivation level behind the IPO which are concerned, and also in terms of the internal and the external aspects of
Yeah,
that.
there is one point I just like to
Yeah.
add on the internal side. I think the top level management also has to be ready for being a public listed company in terms of mentality as well as operational functions, because when you become a public limited company, there are a lot of financial disclosures which are to be made, press releases are to be made, and it gets a lot of attention from media in general, government or the public.
Correct.
Right, so that also has to be an important factor.
So has to be a right mindset
perfect.
at the strategic
So
level.
apart
as
from
well.
yes, financials and business stuff, it has to also be a psychological aspect at times.
Correct. I think it also throws some light in terms of the current disturbances which are there, which I think some of the organizations have delayed their IPO and all. I'm sure the students and the corporates who are listening to Professor Siddhesh, as for the IPO which are concerned, I'm sure there's a lot of new clarity, and probably I think we'll catch up with Professor Siddhesh on next episode. And this is what the kind of content we try and bring on this podcast, so that as for the students which are concerned, the corporates which are concerned, they get some insights as far as the different knowledge sharing aspects which are concerned. Thank you very much, Professor.
Thank you so much for
Thanks a
having me.
lot for your
Thanks a
valuable
lot.
inputs.
Yeah.
Thank you very much.
Thank you.
Thanks a lot.